Welcome back to the channel. Today is another monthly Q&A. So this is obviously the Q&A for November, and ask for questions on my Instagram. Be sure to go follow me. Do not follow a fake account. The only account I have for WillssFX is in the description down below. WillssForex, go and follow it up. I put a little question thing on my story and you guys flooded in the questions. As you guys can see here, we've literally got so many and it just keeps going. There's just so many questions. So what I did was I went through and picked, a lot of questions which people either asking multiple times or questions I think will be good for you guys to learn, that maybe help me in my trading career, that could also help you in yours. So I'm going to timestamp all the questions in this video so you guys can skip through to questions which you think may be useful to yourself. But without further ado, let's get into the content. So the first question is your strategy 100% systematic or systematic and based off your experience? And I would say if you're building a strategy, it's going to be based off both, because you have a systematic strategy. So let's say I need 5 different things to enter a trade. I know that those 5 things are going to be needed to enter this trade because of my previous experience trading. So I wouldn't say I'm trading off experience, so to speak, like, okay, last week price bounced off this level, so now I'm going to trade off the same level. If it's not like in the strategy, in the plan, then do not take the trade. But a lot of people say they trade off their experience, their years in the markets. If you don't have like set criteria to enter a trade, then every trade could be different. You could see something and in your head go, 2 years ago I saw the exact same candlestick pattern happen and it did this, and then trade off that. I'd say that is trading off experience. Whereas if you're just trading 3 to 5 things which you need to enter the trade, you know those 3 to 5 things work from your experience, you enter the trade, and then if it wins, it wins. If it loses, it loses. You know that it works long term. Did you ever look into EA trading? And I actually did. So around a year ago, I think it was, I actually did a video on the channel trying to pass a 10k, I think it was 10k FTMO with a trading bot. Someone approached me on Instagram and said they would give me a bot for free, an EA, and that they sent me proof that it passed challenges in the past. So I was like, okay, I'll use it for a video. I wasn't made to promote it or anything. I wasn't paid to use it. They just said, here's the bot to use. So I obviously used it, and it started off okay. But with these bots, it's based off the market conditions, and if you leave it on, the risk management just isn't great on them, pretty much. It went up a few percent in profit, and all of a sudden one day lost almost 5%. Almost daily loss limit was hit within one day, because a lot of them, I think it's called the martingale, that's what they use, where it'll be going up in profit and profit and profit. You'll have one trade which goes badly, but as it's dropping down, into drawdown, it adds more and more positions, basically adding the lot size up every single time. So let's say it started with a 0.01, the next trade would be a 0.02, 0.03, 0.04, all up to where like a 0.1, and obviously that all adds up. And when it's only a 10k account, and I did it on gold as well, which was what I was meant to use it on apparently, it was just a disaster. I don't even think it blew the account overall, but obviously it ended the time in drawdown, so that account was blown when I tried to use the bot. There could be bots out there that work. Obviously people, I'd say if someone's trying to sell you a profitable bot, then I think that's quite stupid. If I designed an EA that was making money consistently, I wouldn't sell it to anyone. I wouldn't tell anyone about it, because it's pretty much unlimited money. You're printing money. You don't have to do anything. You have to turn the bot off, you have to turn the bot on, turn the bot off, that's it. Unlimited money. Let's say a bot makes 5% a month. That is insane. On a funded account, that's a lot of money. On a personal account, the compound effect on that would just be crazy. So you've got to think, if someone's really got a profitable bot, would they sell it? Probably not. Simple as that. Would you say you live a flashy lifestyle, or do you try to keep it humble? I wouldn't say I live a flashy lifestyle at all. And the reason for this is, I know, and I've seen other people in trading, they live the flashy lifestyle, they try and do it to get all the followers and everything, but then when they realize that's not going to make them money, and they realize they actually have to trade, they're done. They can't live the lifestyle anymore. And especially with trading, the income is very up and down. Sometimes my months are really, really good. The next month could be, like half the profit. It just depends on how you perform that month. Could even be a losing month. And that's why I don't want to live like a flashy lifestyle, spend all my money on everything when I'm only 19. I think that would just be very, very stupid. Obviously you can do whatever you want with your money, but it's not really something I'm interested in. Obviously I spend money on like watches, stuff like that, because it's my hobby. I like collecting watches. I really like pretty much everything about watches, so I buy them. And obviously they are good investments as well. You're never really going to lose money on a Rolex if you get it for a decent price. Whereas if you buy a Lamborghini, I could go buy a Lamborghini tomorrow and I'd probably lose money on it in the long term. So what's really the point in doing that? Obviously you could do it for the fun. If you've got like tens of millions, then it's fine just buying a 200k car. But it's not really something I'm interested in at this point. And even if I did do really flashy stuff, I don't really see the point in posting it, to be honest. The reason I have this channel the way I have it, where I just show trading content and not really anything outside of trading, is because that brings in the wrong people. The people that want to see the lifestyle in trading, a lot of the times just want it to motivate them. People just say it's motivation. A lot of traders actually post this sort of stuff, the cars, the lifestyle, everything, and their excuse is it's motivation. But they know deep down what they're doing. They're drawing the people in, then they're selling their course or whatever they do, but they're using the flashy lifestyle to draw them in. Pretty much, I'd never do that. So if you ever see me post anything flashy lifestyle every single day, cars, lifestyle, houses, money, everything, just make sure to comment and remind me of this video. Keep me humble. Moving on to the next question. How many accounts have you blown? Back in the day, it was bad. I'd deposit 100, blow 100, deposit 100, blow 100, deposit 100, blow 100. And it wasn't great. Let's just say that. I don't really know. I don't think anyone really knows how many accounts they've blown, unless it was like one account, then you'd know that. But like, I don't really think it matters, because if you've blown an account, it is what it is. Doing fine now, so that's, it was in the past. It was in the journey of trading. A lot of people say, oh, I blew an account, but it was just a lesson. And people always, you see these quotes on Instagram and everything, all losses are lessons and everything like that. I mean, technically they are, if you learn from them. A lot of people just take losses and just say, oh, it was a lesson. It was a lesson. If I was at uni, I'd be spending 30 grand on a course, but then I haven't even lost 30 grand from trading. So it's a lesson. I'm like, are you actually learning from that? Most likely not. If you're posting quotes and stuff about trading, about your losses, you're probably not going to be profitable. Simple as that. Because instead, you should be putting the time into journaling those trades. If you're losing overall in your trading, you need to do more testing. You need to test your strategy. How well does it perform in every market condition? Does it perform during a month of consolidation? Does it perform during a month of big news events, or anything like during wars, like when Russia invaded Ukraine? Can you still trade during those times where we have 500 to 1,000 pips per session, like on gold? Can you trade during those sort of times, or does your strategy not work? You need to be able to know, my strategy works this time, this time, this time. Otherwise, you can only trade in one market condition from your 1 weeks of backtesting. You're not really going to know if your strategy is really profitable. So that's why I think losses are only lessons if you learn from them. If you're not learning from them and you're just losing, doesn't really help you in any way, does it? Do you set your TP levels based on risk to reward or key levels? And this is actually quite an interesting one, because kind of a bit of both. I actually did a lot of risk to reward testing on my strategy recently over the past few months. So what I do is I have a spreadsheet, and it would say 1 to 2, 1 to 3, 1 to 4, 1 to 5 for each trade I actually took. So I'd work out my trade, and then I'd be like, okay, what was the max risk to reward this trade actually hit? And then I'd obviously note it down on the spreadsheet. Normal backtesting, but I just added this risk to reward, these 5 columns. And I found that 1 to 3 gets hit, I'd say like 80% of the time, if I'm right. If I'm right on the trade, 1 to 3 gets hit majority of the time. 1 to 2 pretty much every single time, almost 100% of the time. If I'm right on a trade, it will get hit at 1 to 2, well, obviously, but sometimes it can go up and then reverse. But it was very rarely hitting, 1 to 5s. And I noticed a lot of my old trades, they go like a 1 to 3, 1 to 4 into profit, and then reverse down to stop loss. And I was like, what I need to do now is simply just lower my risk to reward. Firstly, it will increase your strike rate. So your strike rate will go up. You'll win more trades. Risk to reward is obviously set. So fixed risk to reward is very, very good, because if you win a trade, you're going to make 3%. Simple as that. And also that trade will cover 3 losses. Whereas if you've got a strategy where some trades are a 1 to 2, some trades are a 1 to 5, you could have 5 losses in a row, but then you don't know that next trade will cover the losses, because it Could be a 1 to 2, could be a 1 to 4, could be a 1 to 10. You just don't know. Whereas with a fixed risk, you kind of know what's going to happen. If it's a win, it's 3%. If it's a loss, it's 1%. Simple as that. And you can base this off key levels. So let's say you got a key level just above. Maybe you can make it like a 1 to 2.5, 1 to 3. Obviously, there's some scenarios where it is tricky to just have a fixed risk reward. But I found it definitely helped my trading when I actually started lowering my risk to reward. It might just be my strategy, but I was aiming too far. I was like, okay, price is going to hit this level. It hit it, but after, coming back to my stop loss and then dropping down. So what I did was I just lowered it, pretty much hits most of the time. And now I've got like an 81% strike rate overall on my strategy at the moment, which is pretty decent. How can you stop making the same mistakes over and over? And this is what a lot of traders do. They make the mistake. They say, okay, I made this mistake, but then they find themselves doing it over and over and over again. I saw someone on Twitter retweet something, and they had this sort of like spreadsheet where they have the mistakes they make, and if they do it 5 times, they got to quit trading or something like that. Or I think it was quit trading, but then it just enforces the rule. So you have that spreadsheet up. Let's say, obviously the more screens it is, you have, the easier it is for this. But when you're trading, you could have maybe your trading plan up on 1, your trading view, your MT4, and then a spreadsheet where you actually have previous mistakes you've made ticked off. So you know that, okay, how many times have I made this mistake? How many times am I still going to make this mistake? Whereas if you have it right in front of you, the mistakes you've previously made, when you're looking at entering a trade, you can look over and say, okay, I've made this mistake before and I lost. Then you don't make the mistake. But I do think the worst thing in trading is when you make a mistake and it wins. That is the worst thing that can happen to a new trader. If you make a mistake, if you over leverage on a trade and you win the trade, that is the worst thing that can happen, because then it makes it feel like to yourself, it's okay to break that rule because it worked. You made profit on that. If you lose, it's a good thing. If you lose, it's a good thing, because if you've made a mistake and you got punished for it, you lost the trade, that is very, very good, because then it's a higher chance that you will never do it again. Whereas if you win, why wouldn't you do it again? Because it worked. Simple as that. So if you are making mistakes, I've had it before where I just make the same mistake over and over and over again. Write it down. Make it visible when you are trading. It could be a note on your desk, or a post-it note on your monitor, a little section on your trading plan or something that you look at before you enter a trade every single time. Have it there visible for you to see, and then it'll just remind you every single time, I made that mistake and I got punished for it, let me not do that again. I watched your YouTube video on blowing an E8 funded account. Can you explain the rule for me? So yes, I did, and this rule was not present on the other prop firms I was using at the time. And when I have funded accounts, I tend to use them on a copier. So obviously any trade I take on one account copies over to the other account. But the only issue with doing this is the funded account rules. Each company has different rules for obvious reasons. They have different requirements for you to trade by. And E8 had this funded account rule where the daily equity resets at a certain time. So your daily drawdown is based off of your highest equity for that day. So I was in this trade on GU and I think I was up like $7,000 or $8,000. And at a certain time, I can't remember what it is, but it's not like 12 p.m. in the UK, it's a different time zone. The highest equity point from then is then your next day's drawdown. So at this point, I think I was up $7,000 or $8,000, which is, over 3.5% on this trade. That trade then went to stop loss. So then I lost 3% of drawdown, even though I was only down 1% on the account. Technically, in closed trades, they base it off of the overall drawdown. So then I entered another trade and I think I lost or something. So I was down 2% overall, and then it said I blew the account. Obviously I was confused because I hadn't blew the account on my other prop firm. My main account was fine, everything was fine, but this E8 one had violated the rules apparently. So I went on there and I reread the rules and everything, and I realized, damn, it's done on the daily equity, not the balance. And I was like, oh damn, that's annoying. But just be careful with the rules. Daily equity resets from your daily drawdown. So I only had like 5k drawdown, which is 2%, but it said I had 13 or 14k drawdown, which was my allowed daily drawdown. So I was like, okay, this is fine, I'm only down 5k or whatever, but I was actually technically down 14k or something, which was, very, very annoying. In my head, I hadn't blown any rules, and I was thinking, okay, trading is fine, boom, boom, boom. And obviously it wasn't. and the account was then violated, so I had to retake the challenge again. But you know, it is what it is. That the previous 2 weeks from that, I withdrew £22,000 from E8 funding, so it was fine. You know, everything was paid for anyway, and I got my refund, so it is what it is. How to manage closing trades 3 to 4 pips from your TP. This one is tricky because a lot of times, you know, I still have it now. Price comes so close to your target and then starts rejecting or starts like wicking up by your target, and you're just thinking in your head, what if this reverses now? People move their stop loss to break even, or they move into profit just in case, but then this is quite dangerous. I actually saw on Twitter, someone was actually talking about this, and if you, let's say you have a 1 to 5 and your TP is 50 pips, so if you have obviously 10 pips is 1%, so 50 pips so obviously 5%, and let's say your TP is let's say price is 5 pips away from your TP, you're relatively close, and then you close out early every single time, just in case it doesn't go to your TP exactly. This adds up. Let's say you do this 5 times. You've then lost 2.5% of profit from those 5 trades. So from those 5 trades, you could have had an extra 2.5% profit. You know, 2.5 losses could have been covered. From those few trades which you closed early, you could have gained an extra 2.5% profit. So when I was looking at it in my head, I was like, I'm losing so much profit from this just because I was impatient and I didn't want to wait for price to hit my TP. Or it could be that you're just not confident in your trade. So when I realized this, I was losing so much profit overall, you know, over a year. Let's say you take, you know, I don't even know, a lot of trades in a year, let's say. This all adds up, and this could be a crazy amount. You know, you could lose 10, 20, 30% profit. I know that sounds like a lot and it's quite unrealistic, but it depends on how many trades you take. This could be realistic, and you could lose a lot of profit, especially on like prop firms. That's a lot of profit. You know, even 5% is a lot. So it all adds up. Trust the plan. If you know your strategy works, you know it hits TP 80% of the time, let's say, then just let it go to your TP. Simple as that. Would you ever move abroad and leave the UK? And yes, I was actually considering doing it next year, mainly for, you know, tax reasons and the weather. You know, the weather in the UK is not great. You know, it's kind of sunny right now, but pretty much every day it rains in the autumn and winter, which isn't great. You know, even in the summer, crazy rain. A lot of the times it's not really what you want to do. You know, wake up in the morning, it's just freezing cold. I don't want that. You know, let's say you could even just stay in the UK in the summer, go elsewhere, you know, autumn, winter, come back in like the spring or summer or something. But tax reasons, the UK is very, very high. I know countries like Sweden, I think America has really high tax as well. But then obviously you have places like Monaco, Dubai, I think Switzerland has low tax. Italy has a flat rate tax. Bali, I think they're having that new digital nomad zero tax scheme or something. But yeah, I was definitely considering it, but obviously go visit those places first, see what it's like before you obviously move there full time. Last question, is your mentorship a one-time fee? And yes, my mentorship is a one-time fee. Go check it out in the description. A lot of people message me or say, how much do I have to pay monthly or something? But it is just a one-time fee. You pay once and then you get the content forever. Go sign up. If you guys did enjoy this video, be sure to like and subscribe, and I'll catch you guys next month in the next Q&A.